Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, edit purposes only. The stock we're going to talk about today would be Tesla, TSLA. With respect to Tesla, the stock today is currently down about 4% so far as of noon on the East Coast in the US so far. And with respect to the stock, why it's causing this sell-off is mainly driven by a negative media affectation, stemmed from an accurate research report that came out from Credit Suisse from an analyst named Dan Levy. And with respect to the research report, on a high-level perspective, it talks about the decline or the declining market share that Tesla is sustaining right now, down from the 29% on the global EV sales in March to the 11% in April, which is subsequently a month-to-month sell down with respect to the market share. And this is kind of weighting a pressure on top of the macroeconomic factors that we've been experiencing so far, with respect just to name a few, like the vehicle recall, the 6,000 vehicles that Tesla has decided to recall, the delay starting on the new production capacity with respect to the chip shortage we've been experiencing on a macro level for the last couple quarters so far, with respect to a rising price, with respect to the Model S and the Model X, and also with respect to the company involvement with respect to the Bitcoin, pump and dump, and also with respect to Elon Musk, some of those sporadic tweets that he has, obviously gave some type of media affectation concern for investor settlement as well. So I'm going to go through a technical analysis to see where do we see the stock price going from here with respect to these negative macro and micro affectations so far. I'm going to give you guys the level of resistance level to look out for in case you want a dollar cost average or further buy your position for the first time. And my price target for year in 2021 as well. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Tesla, ticker TSLA. With respect to the stock, looking at a historical perspective, ever since that peak at the $940 level, we sold off significantly all the way down to the $539.49 level, mainly driven by a lot of the macroeconomic factors we have identified so far, right? The chip shortage, the sector rotations from growth stocks to recovery stocks, the inflation scares that we've been getting from the Federal Reserve, and obviously with respect to corporate tax adjustments that Joe Biden has proposed for us, right? And also a lot of the negative media affectations around like the earnings, and also with respect to just some of the microeconomic factors that's driven directly from the management team, right? The price adjustments for some of the vehicle offerings and some recalls that we've been getting on a recent time frame, right? And we subsequently drove these type of sell off down to this level, right? You could see that in the recent time as of today, we're down about 3.87%, and this is again right mainly driven by the negative media affectation driven by that negative research report, depicting the market shares decline that Tesla had about 27 or 29% in March, declining to 11% in April, which is a subsequent month-to-month decline, which obviously is a negative pressure, which subsequently sell down the stock from there, right? And with respect to the level that we're currently trading at right now, we sold out. We're trading around like the $600 level earlier today, or like the 595. More of a downward level, knowing the fact that you can see on the MACD we've been kind of trending downwards. And ever since then, with respect to that news that broke out around noontime, that's when the research report got picked up on the media affectation. Also on Barron's, an article actually came out supporting that publication at the same time, which drove a more of a sell-off subsequent to it, right? And we were down at some point about 4.5% at one point, dipped below about like the $579 level. And with respect to like if this is today a good price point for you to get in and what level of resistance should we be looking out for going forward, I think right now would be a fair level for us to buy in, knowing the fact that we are testing the resistance level about like the $580 level. If you look closely, this is a level that we've tested prior, right? You can see that we formed that once, we formed that twice, we formed that three times, and currently kind of rebounding at the moment right now. However, I do see somewhat of like a bearish pressure going forward, knowing the fact that the MACD has a more propensity crossing downward. So the likelihood of us like maybe breaking down even further, all the way down to like to be more precise, around like the 569, $568 level, which is a true resistance level that we've formed for several times, right? In May 24th, also on May 20th, and also on May 17th, and also on May 13th, right? And you could go back all the way to more of a further out historical level. We also tested that somewhere around the March 3rd level, around that March crash, and also in even more of a subsequent previous months and years, we also tested that one time at a very strong level of the crash sell-off that we had in December 10th, and also subsequent to that in the November time period as well, right? So definitely a very strong level of psychological resistance on a market perspective that we should be bouncing off of this $569 level from there. So today, right now, I think if you were to further dollar cost average, I think that's the first level of resistance that we're currently testing at right now, and that's why we're kind of contemplating on, are we going to be selling more, are we going to be going up, and you could see that the pressure around the market appetite is kind of even at the moment based on just how it looks on the chart, right? So I would say right now would be an ideal level for you to buy in as a dollar cost average perspective. And if we crash down even more, buying at the $569 level or $571 level would be an amazing price point. And if we even get down further because of just more negative media affectation, something exogenous that we are unaware of, or negative affectations with respect to the chip shortage, that's further going to propelling the supply and demand dynamics for the production delivery that we'll be getting for the Tesla vehicles going forward in the subsequent quarters. That will also have obviously a negative correlations to the stock price going forward as well, right? And also another catalyst that we need to look out for in the next 13 days would be the CPI report that's coming out, right? That is gonna be one of those catalysts that's gonna make it or break it, around like manipulating or influencing the media sentiments around, or investor sentiments around the outlooks for the economy going forward. Which Tesla is such a mega stock, such a large mega cap that will have a large correlations to the indexes, which subsequently is the market as a whole. So that's something we need to look out for, in the going future. But right now, if you were to think about this in a long-term perspective, 580 is definitely a strong level to buy in as the first level of resistance that you could dollar cost average. The next level will be again, right, the $568, $69 level will be another level for us to dollar cost average. And if we break down all the way to the 546, right, that is a very strong level of resistance that will form once, twice, and a bunch of time historically. If you look backward, right, you can see that we tested that a bunch of time, and that will be a very strong psychological resistance level that we could further dollar cost average. And again, right, Tesla is one of those stocks that you have to be able to sustain the emotions, that psychological roller coaster that you'll be incurring going forward. So right now, these are the opportune times for you to dollar cost average and hold your breath, because Tesla is worth holding your breath for long-term EV evolution growth going forward, because eventually all the vehicles in the world are going to be converted, right? The petrol vehicles, the gas vehicles going to be obsolete going forward. It will be more like a novelty in the future, right? So investing in Tesla for long-term capital gains would be a very logical and would be a very wise investments for a long-term perspective, right? So that's something to think about. And these are the opportune times for you to do so and start chipping away, not obviously load all your money into one stock and pray and throw a Hail Mary, right? But really just think about this in a logical perspective. This is supposed to be happening. This is just going through a market cycle. And with respect to this media affectation, the equity research that came out, we need to further understand and testify the incentive behind the equity research analyst. Why is he, deciding to put this out, right? And also look into like Credit Suisse holding on their asset management side, right? How much Tesla stocks do they hold, or how much Tesla shares are they shorting at the same time, right? Because that would give you a good indicator behind the psychological incentives of why they're putting out this report and why they're doing this so prominently and reaching out to other publications to try to influence investors to subsequently maybe get the price to a certain level that they could subsequently buy in, right? You have to think about it that way. So you can't really think about the news or the media affectation in the face value perspective. You have to think about that in more of a 360 degree. Put yourself in the equity analyst shoes. Put yourself into Dan's Levy, the analyst shoes, right? Why is he doing this? Why is he doing this on behalf of Credit Suisse, right? And what is that subsequent correlations that will affect the stock price? and how you could benefit from it as an investor level, right? So that's something to think about. But again, right, dollar cost averaging at these levels will be fair. Continue to chip away, and as we go down more, the risk will subsequently decrease, which gives you even a more opportune time to buy and to build out long-term gains going forward. Just to recap on all the numbers that we just talked about in the technical analysis, I think Tesla right now on the dip, on the $581 level, the 580 is a fair price point for you to get in. Knowing the fact that that's a really strong market psychological resistance level that we've been testing for multiple times out, at least 10 times historically. And if we break down even more because of just like more selling pressure or more negative media affectations going forward, more comparable articles coming out from analysts like Dan Levy from Credit Suisse, going down to the $568 level will be fair, and that's another substantive consolidation level that we've formed historically. So that's another level for you to further dollar cost average if you have some cash on the side. And if we even have a black swan event crash all the way back down to that triple bottom that would form historically, right? That we have seen, with respect to the each crash that would occur in the past, the $545 level would be another great level for you to dollar cost average. But the likelihood of us getting there would be relatively slim, obviously contingent on all the macroeconomic news that we'll be hearing going forward and how that's going to affect the stock going forward and the supply and demand dynamics, right? Some of the black swan events that we need to look out for. So if we get there, I would be very happy to buy at those level because that's a very strong level that will always V-shape recover from. So that's something to be mindful of, right? And my price target for UN will be $950. Contingent on the macroeconomic growth, contingent on this recovering from the supply shortage that we'll be getting going forward. And obviously, the production to be ramped up, while at the same time hitting the earnings projections that Wall Street has also given them as a consensus, right? And with respect to if you're buying at the $580 level in the 12 months target, this will subsequently allow you to generate a 63% of an upside from here, or about 1.6 times your money from here, which to this day, I'm still conservative around this number. I think we could definitely hit that 4-digit, that $1 trillion market cap mark. But obviously, with respect to it, there's a lot of negative pressure that we've been experiencing so far. We just need to be patient and hold on and allow the long-term gains, that patience, to pay off eventually. All right, that's it for today with respect to my technical analysis and insights on Tesla, ticker TSLA. Hopefully you guys gain some clarity and some transparencies around why is it happening right now, why is this dip occurring right now, and what level to look out for, right? Please hit the like button, the subscribe button, also the bell notification, and please watch out for our next video coming up. Take care. Bye.